What's up, everybody? This is Antonio here to bring you another episode in the series of how many shares of a certain company do you need to own to make $1,000 a month, $100 a month, and even $100 every single week. So in these episodes, I do go over the list that you guys do provide. So this is the current list that I do have. Let me know if there's a company I have not covered in the past or you don't see on the list. I'll be happy to add it to it, and we will eventually get to it. But in this episode, we will be going over EFC. So if I pull up Seeking Alpha, you'll see that EFC is Ellington Financial Inc. Currently trading about $12.26. If we actually pull up the company profile, you can read a little bit about them. So Ellington Financial Inc. Through its subsidiaries, Ellington Financial Operating Partnership LLC acquires and manages mortgage-related, consumer-related, corporate-related, and other financial assets in the United States. The company acquires and manages residential mortgage-backed securities backed by prime jumbo, Alt-A manufactured housing and subprime residential mortgage loans, RMBS for which the principal and interest payments are guaranteed by the U.S. government agency or the U.S. government sponsored entity, residential mortgage loans, commercial mortgage-backed securities, and commercial mortgage loans and other commercial real estate debt. So if we look at the sector, they are in the financials. Industry is mortgage REITs. It doesn't actually have anything for employees for them, and then they were founded in 2007. If you want to read a little bit more about them and look at the products that they do provide or services, you can see at their website at ellingtonfinancial.com. If we pull up the actual charts, we can look at about their performance here. So year to date, they are actually down 2.47% in the red. For the 1 year, they're actually 29.58% down. On the 5 year, they are down 16.77%. On the 10 year, they are down 52.34%. Horrible returns there. If you look at the total year, they are down 45.21%. Again, very, very bad performance there. Imagine if you had invested $100 back in, let's see, 2010 is where this is going. You would actually have about $55 is what that would be worth. Very, very bad returns there, not including dividends there. And then if we look at the 52-week range, the 52-week low is actually $10.81. 52-week high is $17.38. It's trading closer to the 52-week low. If we look at the EPS, that is 1.82. PE is a 6.72. Dividend rate is $1.80. Yield comes out to be about 14.68%, and then the market cap is a 841.36 million market cap. If I pull up the actual dividend scorecard for us, again, they are in the financial sector. So if we look at the dividend summary, you'll see that the dividend yield is actually a 14.68%. Very, very large dividend yield. Potentially red flags there. I like my dividend yield to around 2 to 3%. Those are typically very, very solid dividend yields and safe. On the annual payout is $1.80. Payout ratio is 107.78%. 5-year CAGR is a 0.91%, so a little bit less than 1% there. Dividend growth is showing about 2 years, and they do pay out monthly, so every month you would get about 15 cents for every share you do own. So I am not invested in this company. Let me know in the comment section if you are, and if you're invested for the long term, or why you're invested in them in general. But let me pull up the calculator, and we can start crunching some numbers here, guys. So we do want to figure out how much of this company would we have to have invested to make $1,000 a month. So in order to find that, we want to we want to make $1,000 a month. There's 12 months in a year, so you multiply that. So annually we need to make $12,000. If you divide the 12,000 by the annual payout, which is $1.80, this would actually give you the total number of shares you need to own to achieve that. And then if we scroll up here, we can multiply that number of shares times the current share price, and that would be the total amount of money you'd have to have invested currently at these prices. So about $81,733 invested, and you would be roughly making about $1,000 every month, assuming that they don't cut their dividend. But the capital appreciation there has been very, very bad in the past 10 years. And then if we look the next one, a quick way to calculate this is take the 12,000 you need to make annually, divide it by the dividend yield, and that'll actually give you a rough estimate on what you need to actually have invested. So you'll see we get about $81,743. Let's do the next one, which is $100 every single month. This one's, I think, is a little bit more achievable. You can actually take the previous answer divided by 10, and that would be your answer. But since we do have the calculator, let's just go ahead and go through the whole math. So we want to make $100 every month. There's 12 months in a year, so annually we need to make $1,200. Divide that by the annual payout, and that will actually give you the total number of shares. So that is 666 shares you need to own. Multiply it times the current share price, and that will give you the total amount of money you have to have invested currently. So about $8,173. $8,173 is what you'd have to have invested, and you'd be roughly making about $100 every single month. That would be pretty cool. Well, the dividend yield is very high, so it requires a lot less capital. But let's see, so you can take the 1,200 divided by the dividend yield, and you'll see that we do get that rough estimate on how much you'd have to have invested, $8,174. So it's just a quick way to calculate this instead of having to go through the other method that we've been going to. But let's go do the last one, which is $100 every single week. I think this one would be pretty awesome. Imagine every single week you had to have $100 to spend. So we want to make $100 every single week. There's 52 weeks in a year, so you multiply that annually. We need to make $5,200 annually. So divide that by the annual payout. So $1.80. That means that we need to own about 2,888 shares, and then if you multiply it times the current share price, this would give you the total number of amount invested. So you need roughly about $35,417 invested in this company, and then you'd be roughly making about $100 every single week. So quick way to calculate this again, take the 5,200 divided by the dividend yield, and you'll see that we get roughly about $35,000 as well. So those are the quick way to calculate that, guys. Let me know in the comment section if you are invested in this company. Let's wrap up this video by pulling up the dividend yield. So right here, this is the dividend yield. This is the past 5 years, so it'll tell us back in 2018 dividend yield was 10 to 12%, and then in 2020 of the March crash, it did spike up to 40%. That's insane, guys. And then it actually slowly went back down there. Potentially they could have cut the dividend there. I'm not 100% sure, but then it's 2021, it was trading around 6 to 7% dividend yield, and it's been slowly going back up. So I'm not sure there if the share price has actually been just going down, and that is why that has happened. But yeah, guys, this is actually all I have for you. Let me know in the comment section if you are invested in this company, and if you're invested in the long term. I am not invested in this company. I do not plan to invest in it. But yeah, I will talk to you guys later. Don't forget to subscribe with that notification. Definitely would appreciate it if you dropped a big thumbs up on the video. I will talk to you guys later. Take care. Stay safe out there. Bye, guys.